Okay, folks, welcome. Thursday Night Stock Charts Live. What we're going to talk about tonight is the reason why the sounds so horrible right now is because you didn't smash the like button. Please smash the like button. If you don't believe that, well, you're right. That would be because Amazon failed miserably to deliver my power cord for my microphone today, which they promised, and now it's coming 9 p.m. tomorrow night. So, my apologies for the audio. If it gets too bad, people cut out. I'm just going to cut it short tonight. I know people hate bad audio, so I give you my apologies in advance. We're going to talk about economic data. We're going to talk about politics. We're going to talk about Fed's balance sheet. A lot to go over tonight. And most important, we're going to talk about not the daily charts, not even the weekly charts. We're going to talk about the monthly charts today. The month is over. The quarter is over. How did we close? Where to from here? We're going to talk about all that. But first, we need to say hello. Hello to people. Franklin, hey, brother. Luis, hello to you, my friend. Okay, people are going to slowly filter in here. All right, so I think from this point forward, what we need to do is we really need to put things into perspective. You take a look at the polling numbers out of Rasmussen, and this is one of the more reputable outfits for polls, and it's not looking good for the Democrats. Now, they could do a couple of things. One, they could burn it all to the ground, try to monkeypox everybody, close the polls, mail in ballots, and try to do the steal. They're in control. They can do whatever they want. Two, they could have the Federal Reserve turn on the spigots of inflation, meaning let inflation run, yet send out stimmy checks, a hodgepodge of a bunch of things. They're going to have to rely upon the younger vote. The younger vote loves free stuff. The primary voter to the Democratic Party nowadays is the younger voter below the age of 40. It's a big segment of the population. And federal employees. So we have a very short while to go until the midterms. The 2022 midterm elections are now 137 days away. This is as of the 24th. And the Republicans have an 8-point lead in their bid to recapture Congress. The Republican lead has increased by 3 points since last week. Remember, this is as of the 24th. It's probably tightened up since then. So here's where it gets seismic in the shift in the electorate. 54% of whites, 20% of blacks. This was like 10% a few years ago. And 45% of other minorities would vote Republican if the elections were held today. Think about it. That is a seismic shift from the last election. The so-called gender gap has widened in latest findings, with men 54% now 12 points more likely than women voters to prefer Republican congressional candidates. The abortion issue is not going to help that any. But net, it looks as though the Democrats are in a lot of trouble come the midterms, and something's going to have to be done. Burn it to the ground, whether it be in Europe, the Ukraine, whether it be a mix of federal stimmy checks going out to people. Gavin Newsom, the governor of California, is already doing that, like $13 billion worth of stimmy checks to help with people and inflation. You know what that gets? More inflation. But these are bureaucrats. They don't care about the outcome. They care about the perception that they're doing something. They don't care if it's going to cause more inflation. That'll be reported after. Maybe it'll get reported after the next election. So they're going to get their base excited. They're going to send out more stimmy checks. Let's say hello to more people here. Pete, hello, my friend. Tom, hello. Falcon, wow, just wow. Have stocks and bonds markets discounted the U.S. recession at this point? Would you say partly discounted? I don't think they have. I don't think they have yet. The reason is that I don't think, if you take a look at gold and the miners, traders there are not sniffing out the inevitable. The inevitable is that the Federal Reserve is going to have to go back to the printing presses. They're going to have to do it. They want to inflate away the debt. So this is fine with them. The weaker the U.S. dollar gets, the cheaper our debt gets. So it makes it easier for us to pay back with worthless IOUs. So they're going to let inflation run, and they're going to start up those printing presses yet again. And I'll argue, I have evidence to that effort that's going on right now. We're going to go over the Fed's balance sheet, which is reported today. So the reason why I'm going over the midterm polls as of now is because a couple of things. If the Democrats go for broke, if they want stimmy checks, if they want new spending to send out checks to people, because this is what they do. This is what they do. It's the only thing they know how to do, besides burn things down. You're going to see the Federal Reserve ramp up more money printing. What is that going to do to the dollar? It goes this way. What are traders finally going to realize? Gold and the mining stocks need to go up. Now, I'll tell you right now, I would not be a buyer of the mining stocks right here, right now, and I own them. But I'm not going to speak my book. I want to buy more. I'm not ready yet. I think they're going lower. And you know what? Good. Let them go lower. I'm going to go over charts in a moment that are going to show that the markets are pricing in, I'm not going to say equity markets. I'm going to say the bond market is pricing in recession. So to Larry, to your point, yes, the bond market is pricing in to a certain extent a recession. Equities are not, because while they haven't broken down yet to new lower lows on the month, I think that they may just do that. We're going to go to the monthly charts in a moment. We'll talk about it. We'll do a deep dive into the weekly charts. We haven't seen the spike in VIX yet, which is really what I'm looking for to get excited about buying equities, besides valuations. And valuations are still abnormally high. That being said, many times before you get a brand new bull market, PEs are very high because companies aren't making money. Then all of a sudden, earnings pick up, stocks look cheap. So I'm not saying that that can't be the case here, but we have no reason for earnings to be picking up right here, right now. Okay, happy Thursday to you, my friend. Okay, economic data on the week. Durable goods came out with a big beat this week. Very impressive. Pending home sales, more homes going up for sale. That means that your average price for a home is going to go this way. Trade goods. I mean, our deficit is just at nightmare proportions. If this number was reported back in the 1980s, early 1990s, the markets would have crashed. Now nobody cares. It's the twin deficit. You have your trade deficit and you have your budget deficit. Nobody cares about it anymore. We're so used to working off of a credit card that this is just the norm. We export dollars. That's what we manufacture here. Consumer confidence missed. GDP revised lower for Q1. Today, PCE inflation it came in at nearly a 40-year high. The thing to take away here is that at the core, it declined month over month. Same thing with the CPI. Now, just like with the CPI was released, you saw the core number get less worse, but the headline number was bad. What did equities do back then? They sold off hard. And what did they do today? They sold off hard. So that mentality is still intact. They're not looking at the month over month sequential decline in inflation. They're looking at the year over year. And I get it. I understand it. So the markets are afraid of the consumer being hobbled. It's bound to happen. That's why I think they're going to start talking about stimmy checks soon. What else? They're also going to be worried about the Federal Reserve aggressively raising rates. They're not going to do it. I said this back in February. They're not going to do it. And you may be saying, whoa, 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 whoa. They just raised 0.75 percentage point. Yeah. In fact, they raised interest rates 1% in the past 12 months. Inflation was transitory this time last year. Yet during that time frame, we've raised interest rates, which is now up in the double digits. Excuse me, CPI, which is in the double digits. We've raised interest rates by 100 basis points. Give me a break. That's BS. And when you take a look at, I'm yelling, I apologize. When you take a look at the Federal Reserve's balance sheet, you'll remember the Federal Reserve told us, in the month of June, we're going to get real serious. We are going to reduce our balance sheet by $35 billion per month starting in June. August, that gets kicked up to $65 billion per month. Fact check me on those numbers. It's in the neighborhood. So what happened? Today was the last Friday of the month. Here was the first Friday. The Fed's balance sheet stood at $8.915 trillion. They reduced the size of their balance sheet by $2 billion. That is a rounding error. It's a rounding error. So with inflation running rampant, tearing apart people's budgets, you're going to tell me that a 100 basis point rate hike over the past 12 months is fighting inflation? That if it were measured by the old CPI from the 80s and 90s, is it about 15%? That's serious? That's a joke. That's an absolute joke. So, where to from here? Well, are we going into recession? You'll hear the pundits say, this time in 2023, we're going to be in recession. We're in recession now. We're in recession now. Last quarter's GDP was negative and just revised lower today. The Atlanta Federal Reserve has come out. Their tracking model now sees an economic contraction of 1% for Q2. We are here. This is recession. So there's no real argument about whether or not we're going into recession. We are in recession. Whether they document it on paper, people are feeling a recession. It's here. It's happening. And what does the Federal Reserve normally do when we're in recession? They ramp up the printing presses. Show the PE ratio. We're at the cheapest we've been in a couple of years. I guess that's good. But we're still very, very expensive relative to the mean at 16.95. I don't think that the market is priced in. To Larry's question earlier, I think the bond market is beginning to price it in. I do not believe that equities have priced it in yet. First half, FUBAR. For those of you that this is a family-friendly show, effed up beyond all recognition. So I won't say the words exactly. You could use your intellect. Stocks worst in 60 years, bonds in Bitcoin worst ever. Think about it. And it only gets better. I wish this picture wasn't even up here. This is the guy that's not in control. He can't be in control. Biden and G7 push world into economic scenario. This is almost laughable. If it weren't so serious, it would be laughable. Led by the United States, President Biden and a group of G7 economic powers announced plans to ban the transport of Russian oil sold above a certain price. Do you know what the Europeans are doing? They're going to India because India is buying Russian oil at a discount. The Indians, to their credit, are marking up the oil and selling it back to the Europeans. So on the face of it, this announcement out of the G7, it just shows the utter incompetence, of these people, these Keynesian Marxist mentality types, these bureaucrats, these never had a job individuals. The goal of hurting Russia enough so that it ends its war with Ukraine. The war is already over. They're just locking down the territories. It's already over. There is only one way out for Putin: to accept that his plans in Ukraine will not succeed. They already have succeeded. It's already over. The G7's plan to impose a price cap on Russian oil through regulation and petroleum shipping, banking, and insurance. We already knocked them off the SWIFT system. We don't even insure anymore their vessels to deliver oil. Proposals in the word are ludicrous. This guy, Vladimir Putin, must be laughing his ass off. The ruble is at multi-year highs right now. Biden likes to call it rubble. When it got knocked down a few months ago, now it's at multi-year highs, the ruble. Incredible. It's just absolutely incredible. And these price fixes are coming here. I just saw this before I went live. I'm going to share this with you. It's kind of complex. And I didn't have time to do a deep dive, and I don't want to pretend I know what I'm talking about here until I read it. I just thought that this was funny because this is really the tone of my diatribe, my rant tonight. The Fed's QE may be over and QT may just be starting. It won't last long. So true. So true. But the headline here, and this doesn't shock me, the lizard people are at work every day. They're always working to rob you of your money. They're going to relieve you of your money. You're not wise enough to spend your money. The Fed is quietly handing out $250 million to a handful of happy recipients every single day. It has to do with the reverse repo. I was wondering why this is going on for so long. Apparently, we're getting robbed at the till. I got to read more about this. More to come probably on Sunday night. Join me. We'll talk about this more. All right. Micron Technologies, MU after hours, getting hammered after hours. Here it is. We closed out the day at 55.28. Low of the session was 50.10 on the after hours. We closed at just shy of $54 per share. So lots of volatility here in semiconductor land. NVIDIA, we have another article here. In short, on Micron, forward-looking guidance is not going to be looking good. NVIDIA is going to get hurt because of crypto mining. Let's see what the price action is after hours for NVIDIA. We close at 151.59. We're down $1 in the after hours session. So expect weakness in the semis, unless, of course, this is already priced in. Bitcoin breaks down below 19K. SEC rejects spot ETF, FTX buyback, blah, 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 blah. deleveraging well in advance. Watch out for names like MSTR, MicroStrategies. This is my short call back in February. Their basis cost on Bitcoin is 30,000. And they were down yet another 3 1/3% today, more than that. Here's a stock that was where not too long ago. It put in the high of, wow, $1,315. Back in, when was this? February. My God, what a bloodbath. Let's take a look at the weekly charts. Oh, excuse me, monthly charts. Okay, so going back to Larry's question earlier, is the bond market pricing in recession? You bet your bottom dollar they are, because you take a look at this monthly chart of the yield curve. The yield curve is plummeting. You already have certain yield curves out there that have already inverted. The 2s versus 10s, which is what you're looking at, it's really the primary one out there that I watch. It has not yet inverted, but it is going to. We are at current, 4 basis points away? 6 basis points away from inverted. That's a sign of recession. So once we invert on 2s versus 10s, you should expect to see the Federal Reserve step up to the plate. You'll have some Fed governors coming out there talking about, not being as aggressive. They'll claim victory on the inflation front because the core numbers coming down month after month. You'll see how the lizard people roll it out. They're going to sell it. The market will sniff it out. They'll pick it up. You'll see dollar go down, gold, silver up. But right now, the market's not, their head's not there. The market is in turmoil right now. Sentiment is horrible. Nobody wants to buy anything. So that's the yield curve monthly chart. No bueno. It's going lower. The 10-year yield. This is topping action. You have a Federal Reserve that's out there. They're telling you, hey, man, we're going to raise 3/4 of a basis point every meeting until kingdom come. That's not what the bond market's saying. If the bond market believed that, well, hell, we'd be closing at the highs of the month. What do? We faded. Heck, we flashed. Well, we did. We closed down below 3% on the 10-year yield today. What's that all about? We're supposed to get 3/4 of a basis point hike from now until next year. What's this all about? So this topping action implies that we're pretty much done with rate hikes. Maybe we'll get a 1/4 point, 1/2 point, but they'll trend down. Monthly chart of the TLT. This is a 20-year bond ETF. Now, it had a good week early on in the week. I haven't taken a look at it since last night. But on the month, we are well off the lows of the month. We, on a weekly chart, have a higher low in RSI. Good week, resistance at 115, though. So I don't know whether or not we're going to make it through this, but right now, the week is looking pretty strong. 1 trading day left to go. But as we take a look at the monthly chart, we didn't close all that bad on the month. We closed down 1.27%. We were a lot lower at one point. And if you take a look at it on the quarterly chart, because now the quarter is done, we bounced off the rising 50-period moving average quarterly time frame. And this is still a weak chart, massive volume. Stokes going in the absolute and utter wrong, excuse me, this is MACD, going in the wrong direction. Stokes declining down below 50. That's not good. That's really not good. So we're not out of the woods yet. on bonds. The tip markets. These are Treasury inflation protected securities. Down 3% on the month, a little bit more than that. Stokes are weak and getting weaker. Big volume. We are tapping the 2 standard deviation Bollinger Band in green. You can see that gold trades with the tips. So as goes the tips, gold is overlaid and obviously in gold. So as go the tips, so goes gold. And this is all about, you may be saying, why are the tips pulling back if inflation is so hot? It's perception. I always say this. I always talk about this. Don't listen to what the Federal Reserve says. Watch what they do. Ben Bernanke said 99% of all Fed action is verbal. Think about it. It may have been 90%, but 99%, I think you get the point. So right now, the markets are trading on the belief that the Federal Reserve is they're hawks. They're going to fight inflation. I'm not in that camp. I'm not dumping my gold stocks. It ain't going to happen. I'll let them get cheaper. They're already cheap. We'll buy more when it's ready. I'm not ready yet because we're not seeing a bottom yet. They can go lower. So the key is have your liquidity. Get your shopping list out when the time is right. Now is not the time. Weekly chart. Now, what we may get here on the tips is a higher low. On your stochastics, then we're going to be looking for a breakout. This is going to be one of the indicators that we're going to be looking at to say, okay, you know what, we have tips that are firming up here. We know there's a correlation between tips and gold. We'll validate the tips are firming up along with gold. Then we know that it's time, okay, now might be time to watch for historical support levels on the gold mining stocks. Are we at them? Are we seeing bottoming action? If so, maybe we start nibbling and then we buy breakouts, add more. But on the week thus far, this is a fairly bearish week. We're at the lows of the week. Volume is going to probably come in about average. MACD is getting long in the tooth, but we're still trending lower. So I still see more downward pressure on the tips, therefore more downward pressure on gold, therefore more downward pressure on the mining stocks. Patience. Okay, so this is important because this goes back to a couple of things. One, the polls going into November. This is a problem for the Democrats, a major problem. This is the University of Michigan Sentiment Survey. And the last time I spoke about this, we had put in a higher low on this survey. We have now broken to the lows of the month. We closed at the lows of the month. We have closed at all-time record lows on the Consumer Sentiment Survey. So the Federal Reserve has got to be looking at this saying, okay, our goal was to have demand destruction, to reduce demand for products that are in short supply. Well, it's happening. People are tightening up their purse strings. You're seeing airlines cancel flights. They can't even get parts, in some instances, to fly planes. So, forgive me, folks. I got to take another sip. I'm losing my voice. My wife will be happy about that. So, the sentiment survey, very, very weak. To the Federal Reserve, this is a gift. It's a gift because it puts less stress on them to raise rates to fight inflation. The dollar. This is the bane of gold traders' existences. The dollar is extremely strong. Why? It's because the euro is so very, very weak. The dollar trades against a basket of currencies. The yen is a basket case. That's the second largest component relative to the Dixie basket. And the euro is the first largest. It makes up about 55% of the Dixie basket. So as goes the euro, in general goes the US dollar inversely, especially when you have the yen going in the same direction as the euro. So what are the euro and yen doing? They're going this way. What's the dollar doing? Going this way. What did it do today? Faded. We're going to talk a bit about that here. And here might be a why as to why we may get a pullback on the US dollar. Now, I'm not putting a lot of hope in this. So trust me, there's no hopium being sold at this hot dog stand because I don't think that they're going to do it. What am I talking about? The ECB is supposed to be raising rates. And I believe, yeah, they're meeting tomorrow. So for the first time in 11 years, they got us beat. In 11 years, they're supposed to raise interest rates. If they do, that means that the Federal Reserve is no longer the only central bank out there that is not raising interest rates. You have the Swiss bank that's raising interest rates, but they're not the G7. They're not the ECB or the Bank of Japan, BOJ. So what happens if the Europeans begin to raise rates? Well, you should see a bid under the euro is the FXE. You can see how we're like all-time lows on the euro. It's a basket case. Weekly chart. I stand corrected. We're near all-time record lows. I'm seeing some bullishness here. I think we may get a higher low. Stokes setting up for a higher low. Let's go to the daily chart. Good volume today to the upside. So the euro caught a bit today, and I think it had to do with the ECB supposed to be raising rates tomorrow. We'll see. Now, just going back to the dollar really quick. Now, the reason why I think the dollar is going to correct really soon is that relative to its 2 and 3 standard deviation Bollinger Bands, I'll save you the jargon. It's not supposed to be there. It's very extended. And you can see that sellers moved in last month, turning it negative. They closed it positive this month. You saw a bit of a wick, a shadow, topping tail, whatever you want to call it cupcakes. It doesn't matter. All it is a sign that you had some sellers move in. And on the week, okay, it's not working. And on the week, there we go. On the week, we're still up. A little bit of a fade off the highs. Resistance at 28. Let's see if I can get that chart back up here. Because I have my resistance. There we go. Finally. Here's where we're at on the dollar. We're at a precipice. Last month, we tried to pierce through this upper band of resistance. We sold off. One trading day left to go. We'll see whether or not we are able to break through this resistance level or do we fade. If the ECB does not move tomorrow on rates, expect the rising US dollar. What don't you want to own on that breakout on a weekly time frame of the US dollar? You do not want to own precious metals, or you do not want to buy them anyway. If you're an investor, fine, stick with it. But I would not go adding more tomorrow if the dollar spikes up higher. Now, on a daily chart, the dollar had a brutal day. This is a bearish engulfing bar. Now, it's one of my top 5 favorite candlestick patterns. Link below to my 5-part video tutorial on my top 5 favorite candlestick patterns. Free, link below. So I think that what we're seeing here is a probable lower high, not a definite. It's not going to be in the books until we break down to a new lower low. That would be down here at 27.59. Right now, the stars are in alignment for this to move up higher, but I think that we're going to probably roll over here if the ECB moves. If they don't, then the dollar is the only game in town. The VIX. Monthly chart, the VIX closed up on the month 9.62%. We are in a holding pattern, man. I do not believe for a second that the VIX is done going up. Weekly chart. We broke out back here the week of June the 13th. Retest 1 last week, retest 2 of the breakout point this week. 1 trading day left to go, but it looks like the VIX wants to rip up higher. So that does not bode well for equities. Now, if by the end of business we close back down within this trading range, different story. Breakout point failure, bull trap, whatever you want to call it. That means that equities are probably going to move up higher. But as it stands right now, at this snapshot in time, the VIX is looking bullish. Daily chart not looking so bullish. Yeah, we were up on the day, but all up days are not created equal. We faded off the highs of the session. And here's where we get into equities, transports. Monthly chart down 8%. We have a lower high, and we have now broken to new lower highs on the Dow transports on volume. On the week, down nearly 3%. I think that this is a bear flag setup, and we're going to break to new lower lows. S&P 500. We have pulled back to this is a monthly chart, to the lower band of the rising uptrend channel. 3,800 is critical support. We close at 37.25. So on a monthly time frame, we close down below support. Weekly chart. Not looking good. We are down on the week over 3.25%. And it looks like we're going to break lower here. Daily chart. Now, would I short this market? No. Not yet anyway. If we break this lower band of support here, then we short this market. Because in all probability, given the fact that we failed to hold 3,800 on a monthly time frame, we're going to probably break down below the June lows and head lower on the S&P 500. But I wouldn't front run that short yet. Qs, monthly chart, down nearly 9%. Volume, very high. To be fair, it declined relative to the 2 prior months. Weekly chart. We're holding on by a very thin thread. I closed out a strangle position. We net made money on it, but it doesn't expire. It doesn't expire until the 29th of June. And I said, you know what? We made a profit on this. I'm out. I'm just going to book my profit, raise liquidity. It's all about liquidity, right? You want to survive this? Have liquidity, stay off margin. Have liquidity, stay off margin. Because what's been working for us has been certainly not our gold stocks. What has been working for us very, very well is generating cash flow, selling premium, selling options, not buying them, selling them. So that's been working out very well. We have a potential double top on ADX red. My price target on the Qs is 260. I wanted to see a washout down there. Maybe we'll get it. The banks. The banks are not looking horrible. I think we may have a higher low here. This is a daily chart. Why am I on a daily chart? On a daily chart, they're not looking horrible. Let's go to the monthly chart. Continuation breakdown month over month. And this is a classic retest of a breakdown point. You hear all the time during a bull market, a retest of a breakout point. Here's a retest of a breakdown point. We broke down here, April 2022. Retested the breakout point or breakdown point in May 2022. Closed up on the month. Failed to hold it. Failed to recapture this month. We closed just off the lows of the month. We do have some support here at 3108. Where do we close? 3145. Weekly chart. Not looking good. Not looking good. One trading day left to go. MACD very, very extended here. I think we really need a washout in this market. Then we need the Federal Reserve to step back in. Not that I want them to. I know they're going to have to. So might as well make it now. IWM. Monthly chart down over 8 1/3%. Stokes are now oversold on IWM. Very oversold. Volume was about average, not horrible. Weekly chart. Weekly chart was down about 3 1/4% on the week. This looks like a bear flag setup to me. But I'll tell you, ADX red again, bullish, possible double top. ADX green, possible double bottom. MACD very long in the tooth. Let's stick with this. Let's go to the daily chart. Let's go down the rabbit hole. So we're not going to sit here and say, okay, based upon the weekly chart and potential daily chart, it's time to go buy in the IWM. We're going to do this. Take our crayon out. Draw our trend lines. If it breaks, be short. If it breaks out, we get long. Stokes are rolling over. Not wonderful. I'm going to try to blow through these semis. Horrible month, and they're going lower, folks. Remember, Micron, NVIDIA, no bueno. We were down over 16.5% on the month. Bloodbath. Weekly chart. Outside reversal bar or a bearish engulfing bar. It looks like we want to break lower on the semis. Biotechs, monthly chart, up. We're long of the LABU. We own it. We like it. We'll stick with it. Let's go to the weekly chart, how we close in here. We've been talking about this, how we broke out a few weeks ago on Stokes, which is why we've been tenacious with holding it. We are down on the week, but one trading day left to go. Maybe we'll rally back. You never know. Energy. This is another clue that we are going into, if not already, in recession. How do we know? Well, if you're in expansion, your energy sector is going to be thriving. It's going to be booming. This is one ugly chart. This is an outside reversal bar. The month is closed. No one trading day, no one trading week left to go here. This is in the books. This is a basket case. This is going lower. Weekly chart. Bearish engulfing bar on the week. One trading day left to go. Maybe we'll rally back for all I know, but it doesn't look good. And when you take a look at oil on a monthly chart, bearish reversal bar. It closed down on the month, down over 7.75%. Volume was light, but it rose versus the prior couple of months. I think this rally in oil may be close to an end. It's a big statement to say that the rally in oil is over, but I am entertaining the conversation. Lower highs on stochastics. We're breaking down to new lower lows. One trading day left to go. Down volume is declining sequentially. So oil under pressure. What's natty gas doing? Go to the monthly chart. UNG, natural gas. Whew, wow. I haven't looked at this in over a week. Down 32%. Mother of God. Amazing. All right. Bitcoin, monthly chart. Let's update this. Down 40.5%. We have broken and closed down below support. Bad stuff. Emerging markets. Is it time to buy? Soon. Why? Dollar, weaker. I'm predicting it. Not time to buy yet. The monthly chart is pretty ugly. Weekly chart. Nah, not time yet. Soon. Gold. Monthly chart, folks. To be fair, no new monthly low for the month of June. So, on a relative basis, meaning relative to the S&P 500, gold is doing pretty goddamn good. I mean, what's the S&P 500 down on the month? Down 8.25%. And this is what I point out when people bust my chops about owning gold. Gold is down 2.22%. So somebody's going to tell me that Bitcoin is a store of value and that gold is obsolete? I don't think so. That being said, gold stocks are stocks. They are marginable. They can be sold, forced liquidation, as people get blown out of this market. So when will a gold stock stop going down? Well, when the dollar stops going up, when the dollar starts pulling back. So that's what we're looking for. This Fed chairman should retire. Yeah, I saw him being asked questions on Capitol Hill by Congressman Kennedy out of Louisiana, not the Massachusetts Kennedys. And Kennedy, he tries to be cute for his own good. I like the guy, but he's got the good old boy thing going, and it kind of pisses me off because he tries to leverage it. I like good old boys; they're cool, but he does that aw shucks routine a little bit too much. He asked a simple question of Fed Chair Powell. What can the Congress do now to help fight inflation? He wouldn't answer the question. All he would say is, I don't want to tell the Congress how to handle fiscal policy. And I remember Greenspan back when we were getting a balanced budget for the first time in decades. And he was in front of Capitol Hill. And Greenspan, to his credit, was asked the question, with the excess money that we take in, should we spend more or should we pay down debt? He said, pay down debt. If you're going to do it, pay down your debt. But Powell wouldn't say it. Wouldn't say it. You got to cut the size of government, and he wouldn't say it. Stupid rate hikes kills everything. Yep. The Italian, Greek, and Spanish bonds are already heading up. If the ECB raises rates, don't we just get pigs again? Yes, we do. We do. And that's what they're worried about. That's the reason why the ECB is waiting so long. They know the outcome here. It's called fragmentation. So they're worried about the pig countries blowing up all over again. And then they got to go back to the till. It's over. The G7 is obsolete for the most part relative to how the rest of the world is operating. You know, we're in our own little hell right now. The rest of the world is shifting over. They're doing business amongst themselves, and we're being left to hang. Transports of the canary in the coal mine. Yes, sir. Bitcoin, 18. Yep. Talent, 18. No worries, brother. Daughter's birthday, went to movies. Happy birthday to her. Minions was hilarious. Good stuff. Glad you had a good time. Happy birthday to her. Okay, that's the monthly chart of gold. Let's go to the weekly chart. See if there's any hope for salvaging the week. I mean, it's not looking good. We are threatening to break down below this lower band of support. If we do it, we could come down to easily 1,800, if not 1,750 on gold. I think that's pretty much it. Gold mining stocks, avoid right now. Let's do some chart requests. So in closing, folks, on these charts, look out below. I don't think we, oh, my website's down again. Son of a bitch. All right, members, if you had a symbol, I cannot access it on the website because apparently that is down. All right, great. All right, Pete, NN. Next nav. This is an itty bitty stock, huh? Monthly chart is a nightmare, but yes, you're right. We did bounce. Weekly chart. Interesting chart here. We are well off the lows of the week, and we could go positive. Daily chart. Very nice price action. Broke out today. Next nav looking good, showing relative strength. Tesla for Talon. Tesla. We booked profits today on our strangle for this week, rolled out to a new strangle into next week. Monthly chart, very bearish. You know, yeah, we did rally off the lows. I think we need to really hold 626. Weekly view. You know, we broke out last week. This week, not quite a pullback and a retest yet. Daily view. Not a horrible day. A down day, but not a horrible day. We did close off the lows. Volume rose today. So Tesla, I like it for selling premium. I wouldn't want to buy the shares here, but I like it for selling premium. Let's check out the seasonality. I don't know how much data we have here. June is usually by far, actually secondarily, the best month of the year, along with November. But obviously, this is a chalk one up for the bear side for June. So as you go into July, seasonality is one of the poorer months. So be careful here with Tesla. Rick Roofing, ABBV, ABV. Not bad. Showing relative strength. We broke out here. Then again here, retest of a breakout point. Volume is probably going to roll in below average. Daily chart, not bad here. I mean, not bad. On a relative basis, ABV is looking very, very good. Now, when you take a look at the seasonality, this is probably the max data. Yeah, it is. 13 years. June is usually not a great month, nor is the summer months, but it's showing relative strength, and you can't argue price trumps everything. So ABV looking good. Wants to go higher. EVFM. What are you going to say? Normally I would knock a stock at this price, but when you have a stock that is up on the month with the S&P 500 down huge, you gotta pay attention. Here's a weekly chart. Let's get this logo. Wow, good week, really good week. Up 62%, 62.33%. I apologize. Every penny counts nowadays. We broke out. So good looking chart. I would stay small with it. I don't know what biosciences they study or do, but highly speculative, I'm sure. And I want you to take note of something here. If you had TrendSpider, 35% discount code below, watch what you would have been able to do. Click of a button. Oh, how's this chart looking? I don't know. Let me click the button. Bam. We broke out back here on June the 21st. If you bought that breakout, you would have been up huge. All right, folks. That is it for tonight. Thank you for being here. I really appreciate you being here as well. If you could smash that like button, subscribe to the channel. Members, I'll talk to you over the weekend. Remember, ECB comes out tomorrow. Lots of volatility in the Forex markets and in the bond markets. So allow that first hour to die down and then place your trades later on in the day. Have an awesome extended weekend. Happy Independence Day to my fellow Americans. God bless America, and be well.